Hi, my name is Michael Ogechi Abbey, and today I am sporting my Washington Nationals shirt. I'm not sure if any one of you is into baseball, but here in the DMV, the Washington, D.C., Virginia, Maryland area, for those of us who are into baseball, we like the Washington Nationals, and we also like the Baltimore Orioles baseball teams. All right. So I'm being a little sporty on a Friday today. Washington Nationals, here we go. Anyway, let's get back to taxes. Tax season's officially over. When I say officially, what that means is that April 18th was the deadline. Okay. A lot of people got extensions. The extensions last for 6 months from April the 18th. So if you did get an extension, you have from April the 18th, 6 months down the line in order to file your federal tax return. Now, if you owe money, if you owe federal taxes, your interest is still going to accrue. That does not mean that you will not pay interest. All right. So, what I advise people, if you owe federal taxes, call the IRS, make a payment arrangement so that you are in compliance. Don't just forget it and say, well, I got an extension and I owe, and that means my, your owing is on hold. No, that's not the case. Your interest continues to accrue. So call the IRS, make a payment arrangement with them. My tip when you call the IRS, go for the lowest amount that they offer. They're going to ask you how much can you afford every month. You want to go for the minimal amount. Let's say you can, if you can afford $50 a month, say, hey, all I can afford is $50 a month. They'll set you up on that payment plan. Now, if you want to pay more than the $50, you certainly can. All right. But don't set up an amount that you cannot sustain, because then you'll be in default. And what will happen is that the IRS will cancel that payment arrangement. And sometimes it's tough to get another payment arrangement if you defaulted on the first one. I'm also going to talk about some things that I want you guys to look at in terms of looking forward to the next tax season. What's been happening, especially this year, is a lot of people are surprised when they owe taxes. Usually it's very simple. Most times people are not having enough taxes being taken out of their paychecks. And this usually happens when you sign that W-4 form, when you start a job. Okay, they give you a W-4 form to sign and take exemptions. You got to be careful how you fill those forms out. A lot of people get maybe a little bit too ambitious, and they'll fill out the whole tribe of exemptions. Some people take up to 8, 9 exemptions. The more exemptions you put in, all right, the less taxes that are going to be taken out of your paycheck. So you want to be careful. I usually recommend to people, do the minimal exemptions, maybe one. Sometimes I also recommend just do 0 exemptions. That way you'll get the maximum amount taken out of your paycheck. But what's going to happen is that when it comes to tax time, you're going to get more money back. Okay. If you are self-employed or a contractor, someone who gets paid with a 1099, you certainly want to consider making estimated payments every quarter. What that means, guys, is this. Every quarter, all right, you could have vouchers that are prepared by your tax preparer, all right, but it's pretty easy to go online onto the IRS website and print out those vouchers, and you make a payment to the IRS every 3 months. And that payment is determined by yourself. Okay, it could be a payment for 300, 400, 500, as much as you want. All right, and that goes towards your tax liability account. So what will then happen is that at the end of the tax year or at beginning of the filing season, when you prepare your tax returns, because if you're a 1099er, you do not pay taxes as you earn your income. Your income is paid to you with a 1099 without taxes being taken out. So by you paying estimated taxes, you're paying that tax amount into an IRS account, so that when tax filing season comes, you probably, hopefully, will not owe. And even if you do owe, it would not be as much as you would if you were not paying estimated taxes. So we certainly recommend that you pay estimated taxes if you are a 1099, a self-employed, sole proprietor, business person. Very, very important. That way you won't be so far behind the curve when it comes to filing your taxes. So we've covered a couple of things this morning. We've talked about the fact that it's the end of filing season. We talked about the fact that a lot of people have had tax extensions. We've talked about the fact that if you owe federal taxes, you definitely want to make a payment arrangement. It's pretty easy. Call the IRS and make up that payment arrangement, or you can do it online. Now, there is a fee. The IRS charges a fee for making payment arrangements, so you want to be aware of that. The second thing we covered was if you are a 1099 self-employed person, okay? Definitely you want to consider making estimated tax payments every quarter so that you are not too behind the curve when the time comes to filing your taxes. We also talked about the fact that you probably want to look at readjusting the number of exemptions on your W-4 form. That's the form that your employer gives to you when you start a new job to sign off on it and put a certain number of exemptions for federal and state. And that pretty much determines how much taxes are withheld from your paycheck. All right. If you notice that you're owing consistently, you definitely want to check on that because that 95% of the time is the culprit. Okay. So we've covered those three things. I hope this information has been useful to you. Once again, my name is Michael Ogechi Abbey with Enterprise Express Tax Service.